I know a lot of Village Farms discussions comes down to what you've done on the international front over the last few years, and I think you've done an incredible amount in establishing yourself in those markets. But I think maybe some of that success is overlooked, given most people are kind of focused on the U.S. market. So within the context of maybe over the last 5 years, a lot of M&A dollars deployed into the U.S. market may have been destructive M&A, considering the price compression dynamics. So I would say perhaps you'll take credit for skipping the market during those periods. But I'm just wondering, now that rescheduling is on the table and you're reevaluating that strategy, could you just give us a glimpse into kind of what the post-rescheduling strategy as far as U.S. M&A goes for Village?
Yeah, sure. And let me maybe start with a little bit of a side note. The M&A question and how capital's been deployed unsuccessfully applies also to cannabis. So we've had a different view on our capital allocation, which I'll come back to. But in terms of our U.S. strategy, we've been clear that we plan to be in the U.S. There's not a different motive for us. We have the assets, the expertise. We love the U.S. market, and we intend to enter when we believe that federal and or state-specific regulations are permissible for us to operate. We do believe our shareholders have valued our NASDAQ listing. And until that clears, which looks like there's a lot of stars aligning in that direction, we are prohibited from touching the plant in the U.S., but I don't think that duration is much farther away. We are only growing cannabis in about 40% right now of our asset footprint today. That leaves almost 5 million square feet of additional assets to scale into as global demand increases. We would still benefit from a significant cost of advantage if we were able to import to the U.S. from Canada. Also developments we're watching closely. But we're on the record publicly that we believe we can produce at a lower price in our facilities in West Texas than we do in Canada today. So that also remains a long-term, very attractive opportunity for us. As our model has matured, we've been looking for places that we can continue to grow and be a first mover or a second mover advantage. So we are continuing to look at international because, frankly, it's been very appealing to us. We think it's been an early mover for us advantage. So we're continuing to fund our growth investments from our own cash flow. That's also important. It's one of the reasons why we've been a little more skeptical about the value destruction of M&A. So our view on the U.S. has not changed, but a medical market for us in the U.S. would be just great, and especially great if interstate commerce could be allowed. That would actually create more of a moat for us long-term, similar to what we've been building in Europe. So yeah, we are focused on the U.S., but we know that there are some current hurdles. So we have no loss of investment opportunities and growth opportunities international, and U.S. will bring to the table too.